Hello, everyone. So, how are you doing? Today is the 21st of July, and we're on a Sunday, and we're going to assess, like every weekend, what happened in the week, what did we project, what happened, and what do we have in store for us in the coming week. I'm trying to make this video as small as possible because all of us are short of time. But believe me, the time that we spend every week on the charts here helps us a lot in deciding where the Nifty and the Bank Nifty are going. It gives you a general direction of where the market is going to go. And yes, it helps us score from the Bank Nifty and the Nifty charts too. So without adding more time to this video, I'm going to take you onto my screen right away. I've done some research already on the charts, and I'm going to explain to you what is the research, what happened last week, and what are we expecting in the coming week. With that said, I'm going to share my screen with you. So we have here is the Nifty chart. This is a Nifty futures chart, by the way, and you'll see some drawings here. Now, what I use, if you're new to the video, I will just try to explain what I use. To the channel, that is, I use my volume profile tool to give me a structure of the market, and it gives me beautiful readings and tells me what the market is doing and what are the important levels to look at, and what's in store for us in the probable scenarios that the chart can give us using this tool. So if you see, this is the previous, so these are all drawings which we've been continuing from the previous weeks. So this was the last profile that we drew, and this was the recent one that we drew a week or two back. Now this profile told us what was the structure, and we were having a seesaw move within that period. So right from, you can say, 24th of July to, what was this, 2nd of July to the 12th of July. So that was a 2-week period. We were in this entire area. We were sideways consolidating. And then suddenly, somewhere around the 12th of July, that was the Friday of last, we moved into a higher plane. And this week, we have come to a higher plane. But I was expecting that we'll go higher after this breakout, and that didn't happen. And we've been crisscrossing in this area itself. So what we've been doing is this: we went up, and then we have been literally crisscrossing the entire move. We have been doing this, and we've been yo-yoing between this section. We did go up for a part of the time, but then again we've come back into range, and we have hit the bottom of the range. So what is this behavior? The markets are clearly telling us that they need some more consolidation, and they are not willing to go right away on the top, because there are some news floating around that there could be some changes in the budget that could hurt the overall volumes that are being generated in the market. Now, there's a concern that everybody started to trade in the market, and there's a lot of speculation happening, a lot of people getting into options and futures. And, you talk to everyone, you talk to anyone, and everybody's talking about the markets. In fact, businessmen have started, taking away investments from their businesses and plowing them back into the markets, because the markets are giving more returns than what a normal brick and mortar business would give. So as a trader, as an investor, as a mindset of anybody who is into business, he will like to plow his money where the returns are higher. And if he sees that the markets are giving insane returns, if you're giving 30% returns in a year in the markets, why would you want to do that with your business? Because the business is expenses and a lot of other things. Whereas in trading, there are no expenses. The only expense that you have in trading is your time, your investment, and the capital cost. Now, if you're getting insane returns on your capital without having to make an effort, this is a perfect passive income area, which everybody is drawn to and can't blame anyone. The market's in such a way, and the returns that they've generated are insane, and everybody's going to get drawn towards the market. So this is what is happening. So there is news that the FM is concerned, the RBI is concerned, the bank saving rates have gone really low. People are not putting in money in fixed deposits, and they're putting in money in the markets, because fixed deposit will give you 9% at max. The markets are returning that in a matter of 3 months. So why will someone invest in a bank deposit unless they're really risk averse? So what is happening is people are not leaving money in the banks, and they're not putting in money into fixed deposits, and which is hurting the banks, because one of the major ways the banks used to collect money and to use them, the major business in the bank is to collect money from on FDs and lend them to people in the business at a higher rate of interest. So the net interest margin, which is the NIM, which is called as the NIM, is getting compressed on a daily basis, and the banks, the regular banks, are finding it difficult to find depositors who can lend them money at a lower price. Now that's the reason, and that news is creating some kind of a mindset in traders' minds that the FM or the RBI, in sync with each other, having realized all that is happening, may put some curves on the FNO activity in the markets. And if that is the case, and if the turnover decreases, it's going to create a problem, because see, the market is being driven by the liquidity that is coming in, that is being pumped into the market. So if there's more than 40,000 crores rupees of money that is being pumped into the markets every month, where does the money go? The money goes into stocks. And when money goes into stocks, that means there is a demand surge for everything that's around. 40,000 rupees is more than about $5-7 billion every month, $5 billion every month, $4 to $5 billion every month. And if that kind of money is coming into the market and it's chasing the markets, what's going to happen? The liquidity is going to drive the prices higher. And if that has to be curbed in some way, because that a major portion is speculating by the retail traders, and yes, the institutions are making money out of it, and there are FIIs involved. And if RBI is seeing that FIIs are making money out of the Indian investors, that's not a healthy situation for the Indian investors. And the SEBI and the RBI and the government in sync will take measures to curb that speculative activity, because at the moment, everything is rising, everything is bullish. And if everything is bullish, everybody's happy. But the moment there is a crash, in the market, or for any reason, all these investors will be left with, they will be left with things that will deplete in value in a very big way. And these new entrants have not seen what the markets can do when they start to fall. So to cushion all that and to control all that, the risk situation is not very comfortable, and that's the reason there is some talk that there could be some kind of limitation. There could be some kind of raise in the FNO values. Each lot would cost about 15 to 20 lakhs. They could raise the FNO lot size. There are a lot of ways that the SEBI can do to control all of this, and that is the fear that is not allowing the markets to go the way they should be going. So, but there's nothing wrong with what's happened in the last week's action. You see this entire 2 weeks, the entire last 2 days of fall is not very alarming, because if you see this volume profile, and if you see the equilibrium area, which is the value area, which is shaded in the blue, what we have only done is we've returned back to the area where we started on Monday from. So we did go up from the levels on Monday, and we are back to the same levels on Friday. So effectively what has happened is, in this week, we have not done anything major. We've started at the same point, and we've come down, and now we are resting at the same point. So what's in store for us on this in the coming week? That's the question that all of us are looking at. What I'm expecting, there are 2-3 projections like I always do. I'm expecting, now remember, this is the budget week, and the budgets are going to create the news flows which are going to change the market direction. I expect the markets to go back up on the Monday morning or afternoon and try and get back to the top of the range, which is how much? Which is how many points? It is about 166 points. That's half a day's move, or about 60% of the day's move. We could probably go a little bit higher, somewhere here, or maybe here. And then we might again start to peter down and stay in this range for another some period, which is the 22nd, which is Monday, which is the 22nd, and the budget starts on Tuesday. And that's where the real picture starts. So now I'm not going to speculate what's going to happen in the budget, but yeah, what we do in every week is we try to give a projection of what's going to happen in the 2 scenarios. In the 3 scenarios, in fact, the market goes higher, the market stays sideways, or the market goes lower. Now, what will happen in this week is, because the budget session, we are going to face volatility. So this is the move that I expect before the budget opens. So this could be by 11 o'clock, somewhere down the line, we could be resting somewhere in this range. So I would expect us to be in this area before the budget. So I would like us to remain in this area before the budget. And then depending on what we see in the budgets, that will change the entire scenarios. Then what we could see is two scenarios. So if everything, the fears in the market are not coming through, then we definitely should head higher. And how do we head higher? We probably will take this trajectory and probably head higher if the budget expectations are not, if the fear that is there in the market is not met, and that could take us to 25K. That would take us 25K. Now, the second scenario that can happen is we could remain sideways, the budget is lackluster, there are no fears, but there are no major moves in the market, which is not something which I expect from this budget. Either there is going to be disappointment or there is going to be some kind of a rejoicement. These are the two things that I don't expect the budget to be absolutely one way. So this is, in my opinion, the not so probable event. Now, there could be something else that could happen if the fears that I spoke about right now, if they start to happen, after we spend this time in this two periods, we could then start coming lower, and that could then take us down to either the two areas that I see. So I'm going to choose this as a red color because this is the trajectory down, and these are the levels that are going to become important. So these are the three projections that I foresee in the coming next week. And what we could do is we could take a screenshot of all the levels that I have displayed here. The important levels again on the top could be that we could mark this high, which could be an important level, and we'll mark this here. This could be an important level to look for when we go up. These are the important levels which are already marked on the chart. This is another important level that came across for us in this coming week, and I can mark this too. So this is an important level, 24,688, 24,836, 24,500 is already a very important mark. And if we go lower, then 24,455 is a point below which we could target 24,280, 226, and 24,144. So that's the scenario that I'm building up for this week on the Nifty. Now let's go to the Bank Nifty and see. Now the basics of the Bank Nifty will remain, the market scenarios will remain the same, but we look at the chart. So this is what the projection was for the last week, and we've gone wrong on our projections, and the market has not taken off like we expected. So these projected moves can be removed. We did not get these projected moves that we wanted to last week. We were petering sideways, and what we have done is we have continued to peter sideways. And maybe this is not a yellow as yet, but this is definitely a sideways color, which is a yellow. It's not red, that is, I mean to say. It is definitely a yellow. Now, again, two scenarios that I'll build up is if we are sideways, which I think for the banks could be the most probable scenario. I gave you the reasons why the banks are struggling, because the deposits are not coming through, and we could have a similar sideways movement. And to be frank, since we've not been able to breach this area, my sideways projections could now be a little more conservative, and I would expect my sideways moves to now be in this range. So this is an important new level that is cropping up, and the sideways we're being capped out at around this area, which is the 52,850 odd, and we're struggling to go above this. Unless we go above this, we cannot target 53,204 and 53,400, 54,000 in fact. These are areas we will not be able to target unless we move out of this range of 52,850 odd, and we are kept pushing back. Now, the worst case scenario is something that I want to now project. Banks are in trouble, like I have told you. So the worst case scenario, now the color is going to change after I've drawn the situation. I expect the markets to remain within the range for the first day, which is Monday, and then on the other trajectory, we could go down if the markets are disappointed by what the budget gives you, and there's indeed some kind of a problem in the the government decides to raise the lot sizes and tinkers with what's happening in the markets in terms of the speculative activity. We could see red on the screen, and we could get lower. Now, there's obviously the other third scenario, which seems not very probable at the moment to me, but The markets can surprise us because the budget is a session. If we begin to go higher, I expect but the budget to then take us higher if we see some good news and we don't see the bad news that I just discussed. This could lead us higher, and this could be the blue tick that I am looking for. So these are the three scenarios on the budget repercussions for the bank Nifty. You could take a screenshot on these. And one thing I want to talk to you about, leading up to whatever we do and whatever we discuss on the charts is, you need to understand that markets don't move in a random basis. They move from level to level. So when I mark these levels out for you, anything in between is not something that you should expect the market to do. Markets will move from level to level. That's what support and resistances are. These are levels where big players have placed their bets in the previous trading that has happened. And if you have bought something at a particular level and the price comes down to that level, as a trader who's backed your instinct on that particular level, you will try to defend it. Obviously, there are some people defending it and some people trying to fight it. But eventually, when the level is created, it is created by somebody who is a dominant force. And that dominant force will not like to be defeated. And when the levels are returned to that price, they will be defended and you can get some kind of a bounce. And if that particular level is defeated, then you should expect the price to fall from that level, because there is something where somebody has been conquered and their quest to take it higher has been conquered. And then, the guy who's dominated and the guy who's, defeated that level is going to take the market in that direction. So that's something very clearly that we need to understand. Markets move from levels to levels. And when a level is broken, the markets will go in the other direction. So it's a battle out there between the bulls and the bears. And, the levels are the ones that you need to mark on your charts, and you need to operate from level to level. You can't just operate from anywhere. If you're a trader and if you need to trade seriously and make money from the markets, you should understand that markets will move from level to level. And as long as you get your first level right and you get the second level on top and you can target that level, you are going to make money. It's not very difficult to understand how the markets move. It's all about your own psychology and your conviction that the market will move from that level to this level, and sticking to your conviction, not getting shaken out by the noise in the market. That's what's going to make you a trader that's going to make money. So that's it for this week's analysis. I'm sure you will get value from what I'm doing here, because I've covered all the scenarios. The market can go either ways. I'm not trying to predict the market. I'm giving you three scenarios. Now, obviously, no astrologers. We will see the market as it happens and we will react the way it happens. But yes, these paths that we build, these trajectories that we build, help us analyze which levels are important. And once a particular level is reached, what is the next level we can take it to, whether it's on the upside or on the downsides. That's the purpose of this analysis. It gives us road markers. If I reach a particular destination, I need to make markers along the way. Any journey has got directions, and there will be markers along that way. That's what we do with our chart analysis. We mark the levels, and once one level is crossed, we move on to the next level. We work on the probabilities and see what are the next levels that the markets can go to. This is all for this video. I hope you get value from whatever I discuss with you, and look forward to being with you in the next one, and hope we have a session that we get the direction right and we trade in the right direction. But I will advise you not to take big bets before the budgets. We are not speculators here. We're traders. We want to make money from the markets, and we react after the news. We react once we know which direction the market is going to go. We don't speculate and decide where the markets are going to go. So this is the understanding that we go with. So if you like this video, please like and comment what you liked about the video and what would you like to do me to add more value by giving these analysis that I give you, whether you understand what I give you or you need more clarity. And yeah, do keep coming back to this channel and share it with your friends who you think trade and can take advantage of the analysis that I give. Look forward to being with you again. And maybe I'll come after the budget session, and we will do a little rerun of what has happened on that day and what we can see forward. So exciting times ahead. Let's get together after the budget session and give another run as to what we saw on the budget day and what's expected in store. So that's it for this video. I'm signing off. Look forward to being with you again. Thank you.